What's up, guys? Welcome to the Sunday Prep. I'm Ricky Analog. We will kick this off in about 5 minutes. I always start about 5 minutes early so people can kind of come in, get situated. And so while we're waiting, I'm going to go ahead and put a tweet out letting people know that I'm on. And I'll be right back after I get this tweet out. 1 second, guys. There's the tweet, and let me post this into TrueTrader. All right, what's up, everybody? What's up, Joe? Oh, my Mattermost is there. We go. It's behaving slow. Oh, what a crazy Sunday we've had already. Oh my God. I honestly feel like even if you're not a football fan, meaning like soccer, what you guys call soccer, that if you watch today's game, I don't find it possible for you to not have been entertained. It was absolutely the most bonkers game I've ever seen, and it was the hands down craziest World Cup I've ever seen from start to finish. And then the very last final game was just like the cherry on top because the football gods were feeling very poetic the way they wrote that. You couldn't write that. If, oh man, you were the most silver-tongued Maya Angelou person in the world. Having Messi score to put them in the lead, and then going into shootouts, that was just so insane. And then on top of that, I got to watch the Chiefs game, which had to go into overtime as well, which was a little bit of a nail biter. I can't believe we struggled so hard against the Houston Texans, but we won. And so I'm just on cloud 9 right now. It has been such an awesome Sunday already. I even had somebody that were like, dude, I would not blame you if you wanted to cancel the Sunday prep today. It's like, dude, I'm not going to cancel the Sunday prep over some sports, but boy, very entertaining. And I'm so happy for Argentina, and I'm so happy for Messi. What's up, Javier? Hey, Benito, Sonny, Sunil. What's up? I see all you guys. Ragu Gambino. That's a cool name. What's up, Sam? A few more minutes, we'll get this kicked off. I'm lucky I still have a voice. I was yelling. My wife was scared to be within 5 feet of me because she was like, I don't know, I might get hit by a flailing arm because I was very animated. And I love being on the West Coast because, it's still early over here. I'll knock this Sunday prep out, and then I still have plenty of daylight to go enjoy. I'm going to go skateboard with my youngest son, who's been getting into skateboarding. It blows my mind how his balance and his knack for just picking it up pretty quick is really fun to watch. Super blessed. I'm the most grateful person in the world right now. Like, I just have too many things to be grateful for. It's ridiculous. Yeah, Kansas City won. Ragu. In overtime. Again, what doesn't make me too happy that we struggle against a team like the Houston Texans, but we needed a rebound game after last week, and we won. We clinched the division too today, so that's good. No, he's only 4, so we just skate around the house because there's no point in taking somebody like I grew up skateboarding, so like I know what it's like to be a skateboarder, and somebody brings their kid to the park that just is still learning to even just push or ride. It's like, well, there's no purpose in taking him to a park yet. He's just going to get in people's way and possibly get hurt. But soon enough, it's coming. I take my older kid to the park. It's always fun. All right, it's 5 p.m. market time, guys. Welcome to the Sunday prep. Just a little housekeeping before we get started. If you don't have a broker you can trust, check out Cobra, guys. I say it every week. I mean it. Best broker out there. There's a link in the description. It saves you money. I mean, you like saving money. It's there's no difference between saving money and making money, guys. Same thing, all right? Spike Heat, I use these guys a lot. They make a platform that allows you to back test historical data to see if an edge has a statistical probability of being profitable. You know, it's not enough to just look at something and say, I think, I feel, I have an intuition. No, put some numbers behind it and prove it to yourself, okay? There's a link in the description for them as well. Scripts to Trade, they make tools for Thinkorswim and TradingView. I cannot speak highly enough about these guys. The tools they make are super powerful, and even if they don't have a tool you're looking for, reach out to them. They will work with you hand in hand to build your dream, all right? TraderView, this is who I use to track my performance metrics, and it's nice that it's blocking my face. There we go. Make it a little smaller. If you're not tracking your performance metrics, you're missing a really key element to the bigger picture, all right? And you need to be able to understand if you're executing a statistical edge the correct way, right? And so this will help you do that. There's a link in the description for them. There is some earnings this week, a few that are notable. Nike, I see FedEx on there, and there's handful of guys reporting this week. And then we're going to head into the holidays. So make sure you understand who's reporting. It's your job as a trader to treat this like a business, guys. It's not a hobby, all right? And last but not least, over the Black Friday, Cyber Week, whatever, we did a deal for True Trader, and we also did a drawing for a giveaway. And I know people have been nonstop being like, yo, who won that giveaway? Who won that giveaway? You want to know who won the giveaway? First place prize goes out to Scott Staffen. I hope I said that right, correct? So we will reach out to you. There is a second and third place prize as well, but those will just reach out to you guys behind the scenes. But this is Scott Staffen just won a 1-year free membership to True Trader. So congratulations. Actually, when you pop into True Trader, drop me a line, say, what's up, yo, I'm the guy that won, and then let me welcome you to the community and get you situated, all right? So that's awesome, man. I really think everybody should try True Trader. Obviously, I'm biased opinion because I'm a moderator over there, but I've been around, I've had my share of mentors, and I know when there's an actual systematic edge and when there's just people that are trying to throw mud at the wall. I can't speak highly enough about True Trader and the community that we have really tried to create something special over there, and I really think we've done a good job of that. So sometimes I'll do these like topics where I go on to some broader trading related things. I'm going to start putting those into separate content, guys. So there is something I'm going to probably record today. I don't know if we'll be able to get it out today or not, but stay tuned for that. Make sure you're subscribed to the True Trader YouTube channel so that you get notifications when we put this other content out that's not going to be regularly scheduled like the Sunday prep is, right? So click the little subscribe button, turn on notifications, and if you can, while you're there, also click the like button on these videos, and also drop us a comment. Let me know what you like or don't like about the Sunday preps. All right, let's do this, guys. Neither I, True Trader, or any of our representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stock. It's simply for entertainment purposes only. All right, guys. So let's get into it. First things first, I want to start doing the Market Watch calendar for you guys first, right? Before I forget to and we move on to all this stuff. Just make sure you guys know what's important for announcements throughout the week. The real one to look for this week is going to be the jobless claims, the jobless numbers or jobs numbers. That's Thursday morning, okay? And then you have the PCE on Friday morning as well to close out the week for us. And that's pretty much it in terms of things that I really, really care about. So let's head straight into our broader market analysis. Here is your ES, guys. Let's look at the monthly. All right, so, if you guys are trading last week, you probably remember the way things went. We had CPI last week as well as the Fed rate announcement, and things got heavy and really, really heavy. And, actually, I don't want to start on the monthly. Let's start on the weekly. This is about as ugly as it gets when in terms of a failed breakout. You can just see this nasty tail we've created. We've put a close in well below that very key level that we had kind of talked about last week. And in terms of where this looks like it wants to go, it looks like it wants to go lower. So coming into this week, on any kind of pushes back up into levels from last week, I'm going to be looking for shorts, right? Let's see. I just want to make sure there's nothing else I wanted to address on the weekly real quick before I drop right down to the daily. I think that's about it, just that ugly weekly candle. But let's look into the daily before I start talking about the plan for the week, okay? Yeah, so you see it on the weekly, you see it even on the daily, because that was a one-day break above those recent highs, and it just slammed back down. And then you got the 3 really heavy days following it. So there's, take this with, even though I think we're going lower, make sure you understand that we've come down quite a bit. And I don't want to short in the hole. The further we go lower without any sort of bounce back into levels to retest and confirm, the more I think that we're going to have the path of least resistance to the near term be to the upside. So if we don't bounce up into these levels early in the week and we just sell off even more, especially down into these levels here, like this 37.25 to 37.50, I'm going to probably be leaning towards the long side just for the short term, okay? It doesn't mean that I don't think we're going lower. It just means that I think that eventually we're going to have that face ripper bounce that shakes all the shorts out that, had FOMO and attack down here into the hole. So if we push back up into, there's a lot of levels here, and, we'll just use this as a good way to segue into my resistance and support levels, okay? So in terms of resistance, first level is going to be that key level where we broke under, which was, just call it 39.15. Actually, let me go ahead and give you an exact price, okay? 39.14, okay? So anything up into 39.14, 15, 16, in that little area right there, that pocket, which is also going to be your weekly 20, that's the first level of resistance where I'm going to play shorts. If we get through there, I will also look at that 39.50 area, and then above that is the 20-day. I would actually play the 20-day all the way up into the 200-day as a range. So anywhere from 4,000 up to 4,030 is going to be a range where we get up into those levels. I'm really, really bearish in terms of like what kind of individual names I'm going to be playing and the way I'm going to play them. I find it hard to believe we're going to get up there, but obviously it's the stock market, right? I'm not going to write it off. So yeah, anything up into those levels short. If we, like I said, if we don't bounce first into those levels and sell straight off, yes, there's some support levels really close by, like this 38.50 area, which you can see we've had marked for a while. It's also lining up with that quarterly pivot, and you got the monthly pivot right below it. That may be a little too close. I'll watch it. If it starts to hold, if buyers start to make a stand there, I may look to get long into that area. But I'd rather see this 37.50 area first, and then below that is that 37.15, 37.10, even just call it 3700. That would be a really, really juicy level if we were to panic flush down into those areas for long bounce plays. And then when we get the bounce, if we get that bounce from those areas and it bounces straight up into resistance levels, I'll flip bias and get back to being short bias. But, basically the whole point of the Sunday prep, guys, is to help you create if-then statements, right? So if we just sell off without a bounce, I get long. If we bounce back into resistance levels from last week, I'm very short bias, okay? Hopefully you guys have been picking up on these things over the last year and a half, 2 years we've been doing these Sunday preps. Is just the real key here. I'm not here to predict anything. I'm here to show you how to create if-then statements, okay? All right, so let me look at NQ real quick, even though I'm not going to go into a full analysis of the Nasdaq. I just want to see if there's anything in here that makes me feel that it's slightly different. Let me see how this lines up real quick. Yeah, we got anywhere down in this monthly slash 11,000, which is also going to be your psychological round level. Notice that this 11,000 psychological level, you got the monthly pivot. It's also lining up pretty close to these levels here, okay? So anywhere down into there, that's where I'm going to probably be looking to bounce this. And he kind of popped back into resistance, just like I said with the ES, going to be short bias. Let me flip my watch list over here to the main section and check out Bitcoin with you guys. Still kind of just consolidating, right? Looks like we had a bit of a push last week, rejected, came right back down into range, and now we're just ranging again. Every push into the weekly 20s where I'm going to be looking to get short on this asset class. Remember, I don't trade crypto, but I do follow a lot of crypto related equities, and Coinbase is one that, you know, is it on my list this week? I thought it might. Yeah, it is. Okay, so we'll talk about coin later, but just keep in mind these pops are just putting in lower highs, and you know, it's a very controlled downtrend. It's black and white objectively in a downtrend, even though when you zoom into a daily chart, we're just going sideways and kind of building another base. Well, we saw that happen right here for how many months, right? So, I mean, it could happen for another few months here as well. But I'll keep an eye on it. It's no different than any other trading vehicle. It still must abide by the exact same mechanics of how a stock moves as an equity, as a currency, as a future or a commodity, right? They still can only go higher by making higher highs and higher lows, and they still can only go lower by making lower highs and lower lows. So we still have the ability to create these if-then statements and read things objectively, and that's really the key point, is to stay objective. All right, let's look at the let's go into the sector ETFs. We'll look at bar chart real fast to see the matrix. Now, you'll have to forgive me, guys, because of course I've been very busy watching World Cup all weekend, and I have not checked out this matrix yet. Well, I don't know why I didn't go there. Let's see here. So this is going to be my first look at this, and you're going to see how I view this in terms of like my initial thought process. Right when I look at this, hopefully you guys all see the same thing I see. The first thing that pops out, and hopefully my face isn't blocking it on the OBS stream, is that there's one thing on this whole thing that's green, and that's energy, right? So we'll take a very close look at energy and oil when we go into the ETFs. The other thing I'm kind of looking for, is there anything that was really weak? The biggest weakness was in discretionary, consumer discretionary, communication services, tech got slammed last week. Other than that, relative strength, the only thing I see is utilities, and we'll obviously we take a look at that one every week and talk about it. So let's go ahead and peel back the onion. Here we go with, and remember, I showed you last week how I use these 2-hour charts, right, to just kind of get a very quick visual. I just look and say uptrend, downtrend, chop. Which one is it, right? What are we doing here, right? So we are breaking key levels, and a lot of these things obviously are very correlated to, well, obviously some have a stronger correlation or relative strength or weakness to the broader market at any given time. But when you have a big breakdown in the ES or the S&P and Nasdaq like we did last week, you're going to see a lot of the same looks on a lot of these sectors as well. So what if you have a big breakdown in the SPY or the Nasdaq, and we're starting to look at sector after sector after sector, and they all look like this, and all of a sudden you see one that instead of being like this looks like an uptrend or anything that had strength, that should stick out like a sore thumb to you, right? Because, you know, the whole market's getting killed, yet this is up. That's got to be one of those things that you as a trader, when you see it, needs to be a red flag for, hey, this should take a closer look at this, okay? 1 second. All right. So yeah, a lot of these are going to look like this, where we're breaking under these key levels after making this lower high here. Let's go back to the daily. Yeah, just right here's that first level we're going to care about. Down here would be the next level. I'm wondering if it falls back into this channel down here. If it holds here, may have some long opportunities, but just like with the major indexes or indices, pops back into resistance, also going to probably present themselves some good short opportunities. Now remember, a few weeks ago, before we had this pullback, this was kind of consolidating right up against this major level up here. And we had been talking about, look, if this reclaims this level, makes higher lows, we can get another leg higher. Remember, the the whole thing here is about understanding the if-then statement. If it reclaims that level and does this, then we may have a leg higher and a trade. But if that never happens, you never have a reason to put a trade on or have capital at risk. And it allows you to also just keep your money safe when there's no trade, right? This is how you kind of gain that ability that you'll hear a lot of more mature traders talk about, is the ability to sit on your hands when there's nothing to do. That's from this, right? We never reclaimed that level. We never held. And in fact, we stuffed and started breaking down. So you got to be able to read these things that way, guys. Same with XLF. We talked about it. If it was able to maintain above these levels and make some higher lows and start to hold, we could have got a push higher. Instead, just like everything else, lost a key level, made a lower high, and then broke down, right? So this also becomes a major key level here now. So retest into that might give you a good short op. If we reclaim that, then the next level up right there, right into the 20-day, very, very high conviction level. If we were to pop up into this 35 area to fade names in the financial sector. Real estate. I see the exact same thing I've just seen on the last two sectors we looked at, right? Push up, fail to make new highs, fail to reclaim a level, then break down, okay? This one didn't break down as hard as some of the others. I mean, obviously this was the level that it lost that caused this. So, wouldn't surprise me to reclaim this and maybe see it come up in here into this quarterly pivot, which is going to line up with that weekly 20. So 39 would be where I would be kind of short bias on this sector. Again, not one of those sandboxes I play in a lot. This one, even though it broke down really heavy up here, and yes, I do think that that's an ugly breakdown with that failed breakout, right? Let's look at a weekly chart. You'll be able to see it better. That's an ugly, ugly failed breakout on this weekly chart. But in terms of what it looks like compared to all those other sectors, we are still above that 134 key level, and there's still a lot of levels of support below it, right? So if you just had to be long something, right? Because maybe you just hate shorting things, or you just feel more comfortable on the long side of a trade, try to focus your energy into sectors that are going to have more key levels of support below them and are still trading above those key levels, as opposed to something like this, right, that is stuffing that key level and rolling over, okay? I think that the difference in charts between that XRT and this XLV hopefully is really, really obvious to you guys, all right? Materials, still holding a key level. I still think any pop into that 8150 to 82 area is a fade. But let's see if this week we still hold this 7850 area, or do we lose it and then start stuffing under it, okay? That's one thing I would be looking for. Industrials, retest of this trend line that we had broke. I will point out that we are trading above this key inflection point right here, okay? So if we hold above that, this may present an opportunity here for a long, but there's still a lot of baggies up here from that failed breakout. So I think it wouldn't be something that I'm looking for any kind of swing trades in, just possibly like long day trades, right? If we get some opportunities, but there's a lot of overhead resistance in this still. Utilities, remember, we wanted to pay attention to this one because even though it was red on the week, it was relative strength compared to what everything else was, right? Let's look. It was negative 0.55%, okay? So relatively speaking, it had strength. But when you look under the hood, this looks pretty ugly, right? That key level, we did reclaim it. I'd be looking for the 200-day probably as the level to see if we can stuff under that. This one, just remember, we keep talking about it. Yeah, I really want to see us lose 69. If we lose 69 on this and then we retest and start to stuff, and that's not necessarily something that I'm looking for to happen this week, but I'm just talking about in the next few weeks as we do these Sunday preps, that's what I'm going to be looking for. Do we lose 69 and then start to stuff the underside of it? And if we do, I may start to look for some swing shorts in this sector, okay? Because I am short biased just on the fact that, like, I want this to end up being that major inflection point, the highs, and then this to put in a near or a longer term lower high for this to actually start to unravel. Because in terms of, bear markets, right, this thing is still trading really relatively close to the all-time highs, okay? here is your stapes. Let me get back to a daily. Hold on. There we go. Okay. I think it's pretty simple here. Just do we hold underneath this breakdown level and then start to roll over more, or do we reclaim that and then the next level would be the 7730 area where I'd look to fade. Technically, we could still come down here. The level I would look for is not necessarily just a retest of this trend line that we broke out of, which should look really familiar to you. That was just like industrials, right? Yeah, the retest of that line. So a retest of that area, but look at all the confluence there. Your 50-day, your monthly 20, and your weekly 20 with a monthly pivot and an annual pivot, all right in that 7280 area, okay? So any kind of sell-off down in there, I may be looking for some bounce plays on the long side. Discretionary, remember this one was hella weak, okay? And obviously it still had that major breakdown level as well. So a retest of that is the first spot. So 138, I'm looking to fade pops. If it gets through there, the 20-day and 50-day, look at the confluence, okay? So, and not only just those two moving averages right there, but look at these highs from all those days with those wicks, okay? You got to think like those kept getting stuffed. So anywhere up in that level, I'm looking to probably get short if we get through 138 first, okay? Communications. Another one that's just perpetually weak. Remember we talked about the relative weakness that it had. So I turned this magnet on. I don't know if you guys are noticing my struggle here to get things to snap to where I like them, but I turned this magnet on for my drawing tools so that it'll just snap to the lows of candles and stuff. I'm still it's a bit finicky, so I'm still getting used to it, but bear with me, okay? So retest of the monthly pivot, 50-day, and like this, basically 49 to 50, I'm very short bias on the comm sector. But it may start to unravel without even retesting. It's sectors that had that relative weakness even when the market was rallying, and now that the market's breaking down, they may find it a lot harder to bounce than some of these other sectors like XLI or XLV, okay? XBI still kind of hanging in there, okay? Remember, we talked about, even though this trend line looks nice and all, the trend lines don't mean as much to me as actual trend. And that's why we have this pink line right here in this yellow circle, because that's where we had identified that the trend may be making a new lower low after this little bit of an uptrend into some resistance. So we still held that level, but we also put in a lower high that would be confirmed if we then come under 78.85. Okay, so under 78.85, and that basically confirms you this lower high here. Whoops, I didn't mean to make that big. And the colors have changed. I don't know why. Whatever, not important. And so if we lose those levels, I think then the next spot I care about carrying this sector is down here in this 75 area. Okay, 75 is a psychological level. It's been a key level. I think if we retest it, it doesn't mean the bullish thesis on this sector is bust at all. Okay, I think it would look just fine to come down here, retest 75, and then go. We'll see, and we'll do it day by day. But just make sure you understand, even if we break these key levels, it doesn't mean that I turn super bearish on XBI. All right, so tech, remember it got hammered, broke that key level. I'm looking for a retest of the 20-day to be short bias on this. If we sell off, I would say probably down into the 125 to 124 area. I may look for bounce plays. The reason I say that about a sector that, even though it looks so ugly, there's so many names in this sector that are always in play, right? Tech has the liquidity and it has the range. So this is my favorite sandbox by a long shot, okay? And that's for day trades. Why would I not want to day trade stocks that have the liquidity and range and make these big moves into key levels? They're on it's like my main course every single day. But yeah, into the 20-day, I'm short bias. Sell off into 125, 124, I may be looking for bounce plays. Now remember, energy and oil, that was the sector that had the strength. Okay, it's the only one that had a green week. And remember, we talked about them after this big sell-off that they were coming down into key levels, okay? So there's your weekly 20. Even though we had a green week, does that look like a bullish weekly candle to you? Whoops, I didn't mean to move that. To me, that doesn't look super bullish, okay? Granted, weekly candles can be a bit deceiving. We still could be doing this number right here, okay? Let me show you. So as long as we hold Friday's lows, this may end up making a turn and then back above this 87, what is it, 8730? 8736 would be an attempt to end this downtrend and start pushing higher again. But like I said, that weekly candle looked pretty ugly. If we come back under 82.65, this could get another leg down. Then I'd be looking in the 79 area. Obviously, you have the 200-day. May want to try a bounce off the 80 level, which is the 200-day, and it's a psychological round level. But then 79 is just this key level from way, way back, okay? You see that level? Let me look at a weekly just to make it a little less noisy for you guys, right? But 79 has just been that, it was that key resistance many, many times. So a retest of that puts you also right close into the weekly 50 as well. So down there, I might look at longs as a possibility. Doesn't mean they have to work. We could always come down and retest this trend line as well. We'll have to wait and see. Look at oil and see, same kind of weekly candle, same kind of scenario, right? May end up coming down here into this 125 area. Let's see here. But, you know, I do really like the levels we're retesting now. It's just going to be a matter of, like I just pointed out with energy, okay? It's just a matter of, do we hold these lows? Can I grab this thing? There we go. Do we hold Friday's lows and push? Or do we lose this 130.28 level and roll over lower, okay? Pretty cut and dry, black and white objective. Okay, there's your sector analysis, guys. Let's get into the ideas. We're gonna start with the long setups. Strong stocks looking for continuation. Now, think about the broader market. Think about the sectors we just talked about, okay? If I'm looking to get long on anything, we are going, well, there's two types of longs I look for, right? Strong stocks looking for continuation and oversold reversion, right? Forget about the oversold reversion. Right now, we're just talking about strong stocks looking for continuation. The only things I should be looking at for a possible long in that kind of like section of my watch list are names that did not sell off crazy when the whole market was getting whacked, right? So keep that in mind when we're looking at these charts. The first name is something I think has been on my watch list for like the last 2 weeks, maybe even 3. It's Boeing. Look at this chart. It did not get destroyed. It kind of like, just like reminds me of XLV, right? Like, yes, it came in, but we're still above all these key levels, right? Well, look, yes, it came in, but we are still trading well above the 20-day, well above the recent breakout levels. So I'm basically looking for a retest of 179. I think I wrote down. Let me see. Yeah, it just said, I hope I get another day of selling to push us down into the 20-day for a scoop. Very simple, okay? Just for a bounce play. This is the type of chart where if you buy this off the 20-day and it closes strong, you lock in profits, you could leave a piece on for a 1 to 3 day swing. I wouldn't have a problem with that on a name that just looks this good and intact. Now, obviously, if it doesn't work and it breaks down, then one, you take your loss. You don't be like, well, Ricky liked it, was bullish on the Sunday prep, and I'm just going to hold this and see what happens. Do not be a bag holder, guys. The next level is going to be down here in this 175 area. Again, 175 psychological level. Also, was why else is 175 a spot I like? Look, it was the long trigger that got this whole thing started after the last push up. Okay, the pullback, push up, intermediate high, higher low, and then the break 175 sent us. So a retest of that, which we've also retested quite a few times and held, is a good spot to consider. But you can't be buying at 175 if you loaded the boat at 179 and didn't cut your loss. See what I mean? Now, If you are thinking swing trade, maybe you're that guy that wants to take some at 179 and add at 175. If that's you, make sure that's in your trade plan. But if you don't have that as your original plan and you buy at 179, you can't just bag hold the 175 and add there, because you run the risk of having a loss much bigger than what you would have ever planned for. Okay. Next one, CAH. I know I've had this in here before, but this is a new idea, right? We had it, I think, back here, and I think that's why I have the annotations on the chart. But I love the way it's setting up right here. You know, just surfing the 20. Look, this is the same as this. Okay, pull back from the highs. I'm just going to show you guys this because we do it every week. Okay. Boom, boom. If I can get this to line up right there. So that was your trigger. The pullback, the push up, higher low, and then the break, and then it goes to the highs. Okay. Now we didn't quite get all the way up to the highs. It's enough for me. Okay. Pull back to the 20-day. Hopefully you guys can see it without me drawing it on here, right? Okay, so basically, there's your trigger. But I don't want to be chasing this over 80 just so I can try to make, 2 points and then leave a runner for it to continue higher in trend. I want to scoop this off that 78 level on a kind of flush where, basically playing Thursday's lows as kind of my level of risk. Okay, so hopefully I can scoop it off this lower trend line, this annual pivot and monthly pivot, anywhere into 78 with risk under, just call it 77.50, right? About 50 cents of risk. And the target, obviously you can trade it as a day trade, but the real target's up here, okay? 82, actually not quite 82, but 81.50. That's a good return, especially if it's just a 1 to 3 day swing. Okay. Obviously, I would put it on with a day trade in mind and leave a runner if it starts to work. All right. And the last name in this section is MOMO. And it was on my scan, I believe, last week for a possible A+ setup on a parabolic, right? I wanted it up here into the 11s, 12s. Well, guess what? It didn't get there. It just kind of consolidated. And if you look at all the other Chinese names, they're all doing the same thing. They're all doing this little flag. And honestly, a lot of them look good, okay? But I'm not putting them on my watch list this week for you guys, but that doesn't mean I'm not personally watching them. I always watch all the different sectors, and I do kind of lump the Chinese names into a basket, right? So there's the Chinese basket, and you have a lot, well, NEO wasn't the best example, but MOMO fits this little high type flag formation up here pretty nicely. Okay, so the idea here is, let's see, what did I say I want? Over 887 should send it, which is these highs here. And actually, this one looks a lot easier to see if you kind of drill down into a 2-hour chart. Okay, so here's your pullback. There's that. And so technically it's already valid, and we're just getting better prices here. Okay. Now, the problem with this being valid already is when this little intermediate high here happened, that's after hours price action, and a lot of times you just can't put a lot of weight on it because there's not a lot of volume trading. For all I know, let's see, I can tell you right now actually how much volume that was. That was 11,000 shares on this for this 2-hour window. Okay, so 11,000 shares, and then this push up. I don't really want to put a lot of weight on this level, but I do put a lot of weight on this level because this traded during regular trading hours. Even though it's a 2-hour candle, it looks like it's pre-market. An hour of it's pre-market and an hour of it's regular hours. Okay, and let's see, the volume on that was 1.8 million shares. Okay, so over 887 should send it, but what I'm looking for, what I want to happen, I want to see a quick little break of 8. I don't know if we'll get it or not, okay? But I want to see a little dip below 8, okay? Quick little break below 8, reclaim, higher lows. I want to play this thing long versus over under 8, okay? That way you're getting in with really tight risk. And I think under 8, what happens is you get a lot of shorts that pounce in, think that this is coming lower. and you stop out all those price sensitive longs, that you won't have to fight them any longer for sales when it starts to push. So a quick break below 8, reclaim. I'm trying to get long anywhere in 810 to 815 with stop maybe at 789. So 20-30 cents of risk. And if it starts to go and we clear 887, the next logical target, guys, is those recent highs. And obviously, if this is going to get a leg higher and go, maybe we end up getting into that 10, 11, 12 range, but all from an entry where you can have extremely tight risk. Okay. So that's it for strong stocks looking for continuation. Next section is oversold reversion. 2 names in this list. The first one, BMY. So I like 72 just for the fact it lines up with this trend line and that monthly pivot, but also you can just see, I mean, just draw a line straight across, right? Support, breaks below, resistance, back above, first test, okay? Hasn't been retested since then, but we want to see, does old resistance become new support? If so, I think 72 is a good spot to possibly get long. If it doesn't work at 72, look at 70. 70 is a key level. We can just look at a weekly chart and look at that level. I don't know. I think this is an old, BMY was on an old prep or an old Sunday prep from back here, and the target was highs. It got there. So ignore this risk reward thing, okay? Right now I'm just trying to show you that 70 level. What's so key about it, okay? So if 72 doesn't work, 70 is the next level where I care about BMY. Pretty simple. Yeah, so this right here, this risk reward thing was for this trade right here. And remember, it was over 77.82 and the target's these highs. Well, it got there, it worked. Never gave a good entry though, so it's not like trust me, it wasn't a trade I took, and it's not worth even, it's not any sort of brag. It's actually more important for you guys, especially people learning how to read what the author's writing, is to see this setup and to see how the author is trying to tell you where a defined target is and how trends continue, okay? And the only other name on this list is IBM. And dude, that right here, this is the ugliest failed breakout ever out of this formation. I had this on watch, I believe, last week for a possible break out of this, and it did. It broke out and just stuffed so hard. But regardless, it's sold off really fast, right down into the 50-day. So I'm watching it for a play off the 50-day. I don't know if it gets there. You may watch it versus Friday's low a day and try to catch a reversal on this. If it loses these levels, it loses the 50-day, can't hold all that, the next spot's that quarterly pivot / 200-day. So that's the idea on IBM. We'll see what it does. All right, that's it for long setups. Now we're looking at short setups, weak stocks looking for continuation. First name on the list, shouldn't surprise anybody, Tesla. God awful ugly chart, okay? Just could not hold any levels, gave a beautiful short continuation trigger the other week, and then it gave another intraday one on Friday, which was this right here with a low a day target. And if you flip this upside down, this should look familiar, right? We keep talking about this setup while they work on the short side too, guys. So that was a key level, right? This trigger. I can zoom in. Here's a 5-minute chart for you guys, okay? So this was that key level, 155.61, I think it was. Let me look. We had called this out in the chat in True Trader, 155.61. So what am I looking for this coming week? Honestly, I don't want to get thinking that we're going to catch a really big trade on this, but any kind of parabolic spike back into that to retest that breakdown level is a big level for me to fade. So 155.61, even 155.50. If we spike hard Monday morning, tomorrow morning, up into that level, I will be trying to fade Tesla. Next idea is AMD. Hoping to get a parabolic pop into 70.75 sometime this week. You can just see, just like it looks exactly like that Tesla setup, right? So the pullback after that big failed breakout and then retest of this level, okay? Any kind of spike up into that level this week, I want to fade. Next one is coin. I told you we would talk about this coin. Looks like it is destined for singles, okay? I keep talking about this. We just broke down underneath this level here. Let's see if I can draw it straight across. Just look at how textbook that was, okay? Retest into the 20-day, lower high, break below, washout. Okay, so how would I play that this week? 40.50. I'm looking for a spike up into 40.50. So we can draw this here, right up in here. Okay, so even though that's like 40.60, you can see there's some lows in there, that 40.50 area, any kind of parabolic pop into that level. Now, this is an intraday chart. Okay, this is a 5-minute chart. Look at this level, 40.50. Now, let's zoom out to a bigger time frame. What price was this? 40.83. Amazing how those things line up, isn't it? You think that's a coincidence, you're crazy. All right, next idea on this. 40.50 spike on coin, fade for me personally, okay? Next idea is Dash. Said, I'm hoping I can get some kind of spike into 57. Should be able to clearly see this level. You see this level? Support, below it. Resistance, support, we're back below it. Any kind of parabolic pop into 57, which if we open up around where we closed last week, let me get rid of these headlines here so you can see this information. So you can see we closed 52.52. If we don't gap up and we slam into 57, it's a 4.5 point rip off the open. I don't care if this ends up going back to 60, 61, 62. If we make a 4.5 point pop off the open, I'm fading that just for the fact that that move is unsustainable. And it doesn't mean I'm looking to just ride this all the way back down to 45. This is for a day trade, okay? So I will short 57 on a parabolic pop and look to take 1, 2, 3, 4 points off the trade, maybe leave a runner on, but remembering that this was always a day trade, okay? And the next and last idea for weak stocks looking for continuation is NTRA. So these guys had, let's see, news. There was some institution, one of the health organizations, recommended screening for a chromosomal deficiency, which these guys make a test for. So that's why it had this big pop. They got an upgrade on it. And here's the thing is, and you can just go into the news and read it yourself. Oh, I guess the news is down here, right? So you can read it yourself, but they even say it in here, right? That the whole play here is that they feel, or at least the analyst that gave it the upgrade, think that more health organizations are going to come out and make the same recommendation for this screening, which if enough do that, then it will get coverage from the insurers, where, you know, when it's fully covered by insurers, a lot of times that becomes a very bullish catalyst for these companies. But until then, any kind of pop up into 48 is a gift. I don't know if we get there, but it's got to be on watch. The only other thing I have to say about it is you got to make sure that the liquidity is still there. So it had a big, not huge, but 6.5 million shares traded on Friday. Okay, but it typically trades less than 2 million. So the only way I'm trading this is on Monday, where there may still be higher than normal volume. Sorry guys, I'm still kind of fighting off this. That whatever I had a few weeks ago came back and got me again. And I also have been screaming from the football game all day. Yeah, so the other way I can look at it is I could see a retest of, you know, the 50-day in this 41 area as a possible bounce area, but I'm really more interested in the fade on a push into 48. And if you guys can't see this, get glasses. I mean, I don't know how you couldn't see this level, right? Like, it's just been tested twice, a big pop up into those levels. I think it's a beautiful area to get short. All right, and the only other name on my watch this week is for overbought reversion setups. It's kind of a special situation. It's COSM. It's a small cap. It's a small float because they just did a reverse split on Friday. And, you know, here's what happened. So this thing is full of I don't want to use I'm not trying to make fun of people, but ever since AMC and GME you now have all these conspiracy believers that, you know, there's naked shorting, synthetic shares, and like it's everything is manipulated to the point where, you know, it's never the fact that it's a shitty company that causes the price to go down. It's the shorts. It's the evil shorts, right? Well, this now is one of those companies that has a cult following saying the same thing, right? So what they did was a reverse split for 25 to, was it? Yeah, 1 for 25. So this was trading at less than $1 was the highs. Let's see. This high right here was less than $1. So you gotta multiply by 25. It puts that high up there at 21.13. Well, on the day of the split, a few brokerages, I don't know how many, but they bumbled the split with their clients and didn't do it correctly. And I think there was some sort of panic in the pre-market that sold it right back off to where it was almost before the split, literally down into the like 40 cents. Maybe what was the low? Like freaking 20 something cents. When it should have been trading up here around $7 to $8. Well, a lot of people caught this, and you know what usually happens is if you buy this down here, and it starts to go, the exchange, which is I believe that Nasdaq, will bust these trades. Well, they didn't bust them for whatever reason. I think they let it just go a little too far too long, and they were just like, it is what it is, and this is going to stand. But then it went all the way to 24, 25 almost, which a lot of people will go, holy cow, that's insane. But really, that's only $1 pre-split, right? So yes, the move's crazy, but look at how it sold right back off into 7, which was where it was pre-split, remember? So what I'm thinking is there's still, like all weekend long, there's been these crazy Kool-Aid drinking cult members that are, you know, this run's not over. The synthetic shorts, hedge funds, evil hedgies got to cover. This is just beginning, right? All right, cool. Let's see what you guys got pre-market tomorrow morning. If they pop this into 12, 13, 14, and it starts to top out and roll over, this is most likely going to just settle right back down into 7. And then possibly, like, I don't know about for the next week, 2 weeks, but should settle back into 7 relatively soon. And then over the next few weeks, should probably head even lower, right? Because this thing, prior to the split, was just in a complete downtrend. They do have something in place to sell paper, so you know what the name of the game is here. The baggies can scream at the top of their lungs fraud and market manipulation all they want. Really, they need to just hold a mirror up to themselves and look at the company that they're buying into the story. So that is kind of the special situation, overbought reversion setup. The problem is that it's already it traded all the way back down to 7 after hours. So the only way there's a play here is if they do somehow, you know, if I wake up and it's trading in the 14, 15 area, it's definitely on my watch. I just want to make sure it's on my watch, even though it may not turn into anything. But it is there. So let's go ahead and see if there's questions. Let me pull up the thread and see if we have any. Grandizer says, would you consider CRM long? I mean, if you're looking at it like a double bottom, you could play it as a long where you have very defined risk. I personally am not looking to get long, no. But I can see how you could have a game plan. And remember, I'm going to always repeat this. You can have a plan, and nobody really can tell you that your plan sucks as long as you have a plan and you stick to your plan. Because your plan should include how you're managing risk and how you see this being an asymmetric trade, how you're, you know, basically you have a tight level of risk here, right? Under 127, and it's no longer a double bottom, it's now continuing trend lower, and so you have defined risk. And if you get an entry at 127.30, you're looking at about 40 cents risk on a $130 stock for a possible, you know, if it wants to make a move, even if you're just a fib guy, even if you're just looking at this from a fib level, you know, 50% retrace is going to give you like 6 points, right? So maybe you're risking 40 cents to make 6 points, and you're like, look, that's asymmetric. And even if it doesn't work, you had a plan, your risk was defined, and you stuck to your plan. Now, if you say, I'm going to buy this off 127 and I'll stop under 126.89, and I'm looking to sell into the pop, and it loses 126.89, you don't stop out, that's where the problem comes in, guys. So make sure that you create these plans and you stick to them, because discipline is really the key element. But I see the double bottom, and I see how you could have tight risk. I just personally am not looking at this as a possible long. Javier, thoughts on AMGN long at 258 or 255? Well, I see the levels. It's just one of those ones where, yes, I know it trades like enough daily volume for me to be involved in, but like, if it's in the first 30 minutes of the morning, yes, I would take that. Any other time during the day, probably not touching something like Amgen. Just because if you look at a 1 minute chart, like once the opening 30 minutes is up, see if I can get past. Yeah, this one sucks because it had this huge candle here. Let's see. So you can see like this isn't even trading. This is like 8 minutes into the open. We're trading like 5,000 shares a minute, right? You do get like a few candles here that trade 12,000 shares, but like it just trades very illiquid, even though it does trade more than 2 million shares per day. And remember, like I always say this to everybody, and that is like I have a minimum average daily volume that I use to try to keep myself in plays that are liquid, but like that's just a minimum. And it's also something that you have to look at. That's just one aspect of the volume, average daily volume. There's also like, what's the average 1 minute volume? What's the, is the bulk of the volume traded in the first 30 minutes, or is it one of those tickers that, just has its evenly distributed throughout the whole day? Because there's stocks that trade 3 or 4 million shares a day, but it's evenly distributed, and they don't have that 30-minute price discovery phase that trades higher than normal volume than the rest of the day. And so you have to kind of take all those things into account other than just the average daily volume. C. Paul says, Santa Rally can be real deal. History backs it up. Again, like when we're talking about things like predict that, like to me, a Santa Rally is people trying to predict something. It's like, look, historically, we have these rallies into the holiday season, but really, all I care about is the trend. All I care about is what is price telling me. If price starts to rally and we start to see the author of the story saying that, then I will think that. But like, I don't want to try to predict. I just want to read what the author's writing and then follow price. Sunil says, bear case for Amazon. Maybe the fact that I feel like they've seen their heyday. I don't know. Bear case for Amazon is just the fact that look at this chart. Honestly, lower highs, lower lows, and that big fail breakout last week. The opposite view is that look at the extension from the weekly 20. Can we go lower? Yes. Should we go lower? I'm not sure how much, right? We're at some key levels. Maybe we come down here into 81s. Maybe we even come down here into 65. But the further we get away from this weekly 20 without getting back to retest it, like look here, big sell-off, then some sideways action, we finally push back into it. Big sell-off, maybe we get some sideways action and finally push back into it. Maybe we sell off some more and then consolidate. But make sure you kind of try to look at it from both sides. But this daily chart is just grinding down the daily 20, and this is a very textbook downtrend, right? Push into the daily 20, pull back, lower high, and here was the trigger this was the short continuation trigger right here to head lower. Okay, so now it hasn't resolved to the target. When you get this setup right here that I'm just highlighting, which is this, and we'll just do that whole area, okay? This setup has a defined target of this, okay? So it hasn't got to the target yet. So pops back into resistance can still be looked at as the ability to join this trend that has not resolved to the target yet. But where does this setup fail? This setup fails if instead of getting to the target, we then come up here and trade above 104. And at that point, then I think we do see that retest of the weekly 20. Okay, I don't know if there's any more questions. I'm going to wrap up here. Again, if you guys don't understand some of these concepts that I talk about week after week after week, month after month after month, about reading what the author is writing, you need to learn it, because it's the building block of every other aspect of trading, is being able to read trends. So if you don't understand it, please come check us out at True Trader. I mean, there's a million other reasons to check us out. But like I said, even if you just try the 5-day trial for $30, do yourself that favor. If not, I will see you guys in the market tomorrow. I hope it's not your money I'm taking.